What's up, guys? Welcome back to another episode. And this week, it has been some week. It's been a very, very eventful week. What with the US presidential election throwing up a, let's just say, surprising result. All the polls, I mean, if you follow this in any way, you would have seen the polls were all pointing to this being a really razor sharp, like razor close race. I mean, they were saying that it was kind of like half a percentage point. And there was a lot of view that Kamala Harris was going to pull it out of the bag at the end, and even sort of the shift kind of going in her direction towards polls and stuff like that. And then all of a sudden, it was what is in effect a landslide for the lifelong real estate investor that is Donald J. Trump. And so obviously a lot of people around the world scratching their heads. What does this mean? Because he's certainly not conventional. And a lot of people worried about it, especially over in Europe as we are, because there's a lot of stuff that he has threatened to do in terms of NATO, and there's things around bringing investment back to the US. And obviously, if you're based in Ireland, as I am, you know that a huge amount of our economy is driven by US foreign direct investment into this country in the form of all of the big tech companies that are based here, headquartered here in Ireland for their global operations. So worrying times. Hopefully his interests will be on his Doonbeg golf course, and if the focus is on that, maybe he'll cut us some slack when it comes to it. Funny enough, one of my accelerator members, Alan, and he was on a family vacation earlier in the year, and I can remember he came back from, I think it was Las Vegas. He was on a trip to Las Vegas, and when he was there, he's speaking to taxi drivers and security guys, and just, you know, everywhere he went, he just sort of would strike up a conversation and try to kind of gauge what the direction of the election was going to go. And he came back, I think he was there in July or August. He came back absolutely convinced that Donald Trump was going to win based on the conversations he had. So it makes you wonder how on earth these pollsters got it so wrong, or did they get it wrong? I read there just in the last few hours that Kamala Harris's campaign spent over $1 billion trying to win the election and has ended up $20 million in debt, despite having raised over $1 billion. And so you kind of wonder what was going on there, like who was running the show. Anyway, I want to give a very quick shout out, if you don't mind. There is, a few months ago, I signed up to a website called buymeacoffee.com. And this is a website that allows you guys, listeners, to actually buy me a coffee. If you like the show, if you appreciate what I do, the work that I do and the content that I put out, then it has a link and you can basically buy me a coffee. And it's just, I signed up for it very quietly. It didn't make an announcement or anything like that. I just put a link to it down in my show notes. And I've always been curious, do people actually read the show notes? When I put a little bit of time into just creating a bit of a show note, a summary of what's going to be discussed in this podcast. And then I put a couple of links at the bottom of that. And sure enough, there was somebody reading the show notes, maybe that one person, but he went and when I opened my app during the week, the buymeacoffee.com app, I was just going to show it to actually one of my kids and just show them this app. And next minute I see €25, 5 coffees purchased. And I was blown away by it. I was just like, what? Hold on, somebody's actually used this? And so I want to give a very quick shout out to Michael Morrissey, who left me a nice note and really just appreciates the podcast and wanted to buy me not just one coffee, but 5 coffees. So Michael, super nice gesture, very generous of you, and really do appreciate it. And so if I can be of any assistance, please do reach out. But it is appreciated very much so. So let's get into the main event. And we were just talking about the US presidential election. And so I guess it's only appropriate that our guest this week will be from the US of A. And so Joey Mure is himself a podcaster, and he has a very popular podcast in the US called Wealth Without Wall Street. And Joey's mission is to re-educate business owners and families on how money works. The aim is to become financially free. And sometimes people lose sight of what it means to be financially free. It doesn't necessarily mean, having no debt at all. It just means that you're getting more cash flow in at any one time than you were previously. And so it's an interesting way to look at it. And I do think you're going to find it very interesting. Like, a lot of people will feel like the only way to make money is either buy real estate or, invest in the stock market. And I think that's where Joey is coming from, is that there are a lot of different ways to skin a cat. And so I think you're going to enjoy my conversation with Joey Mure. Joey Mure, welcome to the podcast.
Gavin, so good to be with you today.
Let me start by asking Joey, what is it like at the moment in Alabama? Because I'm speaking to you here from a dark and dank Dublin here in Ireland. Tell us about where you were at.
I'll tell you what, this time of year is absolutely perfect for about a couple of weeks. And then it goes into, Alabama is just either cold or burning hot. There's not a whole lot of what you would call autumn or fall, and there's not a lot of spring. It's just kind of summer and winter. But right now, it's perfect. I love to play golf. I don't know if you do, but man, this is the prime time to be on the golf course for sure.
Yeah. Well, that's funny. I lived in the south of Spain for a couple of years, and when I was down there, I played golf. Not very many times, but I played it in the scalding heat of the south of Spain, and it was not pleasant. I never liked walking around a golf course in the burning heat. So, sure. Joey, for the people that are listening internationally who've never heard of you, and we'll talk about your podcast in a little bit, but tell us about what you do and who you are.
Well, I'll tell you what, we are the countercultural people here in America, and I don't know what it is for you, where you are in the world, but there's typically some sort of an investment banker or some sort of a pension manager of some sort that is convincing people all over the world to give them their hard-earned money, usually on some sort of an automated basis. Like, hey, I go to work and a portion of that gets paid to fill in the blank, whoever that is. And then they, quote unquote, I have air quotes if you're just listening to us, manage your money, and they get paid a fee to manage it. And that means if it goes up in value, they get a little bit more. If it goes down in value, they get a little bit less. But regardless of the actual performance on your investment portfolio, they get paid. And what we would call that is abdication of one of the most important things in your life. And that is to take control of your finances. That you need to become the best investor that you can be, so that you can steward all that God's given you in a way that will help you get to financial freedom. And financial freedom is not handing it over to somebody else, but taking control of that. So Wealth Without Wall Street is the name of our podcast and our company, and we're here to educate and to equip people along that path.
That's a super clear explanation, Joey. Thank you for that. And tell us, before we get into all of that good stuff, let's go back a little bit. Can you tell us what has brought you to this point? Describe your career starting from, say, leaving university or something like that.
Yeah, well, as soon as I left university, I went into the mortgage business. Here in the U.S., you have a mortgage advisor, somebody who you work with to take out a loan to purchase a home. And I think that's fairly universal, but I'm sure that there's differentiations, right?
Yep.
And so I made a great living doing that. But along that path, as my active income increased with more and more, my reputation growing and my portfolio of clients and referral partners growing, I noticed that it really wasn't producing freedom in my life. In fact, it was going the opposite, because my relationship with my family was getting worse as I was working 60, 70, 80 hours a week just to keep up with the demand on my time. So here I was trading the time that I was saying I was working hard for this family, but yet I would be at the beach with them on vacation, and I would be stuck back in the condo telling my kids, my wife and 5 daughters, by the way,
Wow.
You guys pray for me
five
after
kids.
this.
I have four daughters and one son.
So you're the one that ended up with the son. I just got all daughters, okay? But you can imagine then, Gavin, I'm sending them down to the beach because I have to take one more phone call.
Yeah.
And
I can relate.
what happens, right?
Yeah,
4 hours later, I'm still up in the condo and I start walking out down that boardwalk behind on the beach. And there's my kids and my wife walking back up towards the condo because they're done for the day.
Yeah.
And here I am.
Going down to join
I'm
them.
present physically, but I am emotionally and mentally completely not there because I'm on the hamster wheel to produce the next dollar, like the active income, because my money wasn't at work. It was me. I was the only asset at work in my family. And I knew there was something wrong with that, but I didn't know what the way out was. And that set me on a path to, I read a book that my now business partner gave me, and it changed the whole way I think about finances, about taking control of them, and then producing and creating passive income so that I can become less and less a requirement of my time, and I could get my dollars to do the heavy lifting.
I think that will resonate with an enormous number of our listeners. Just the fact that it doesn't matter how much you earn, you always feel like you have to work harder. And one of the things that, apart from your time, there's also, what is it? They call it the hedonic treadmill, where you're making money, you're earning more. And so if your salary was 50,000 and then you get it to 100,000, your lifestyle hasn't necessarily changed that much because your taste goes up a little bit more expensive, your travel gets a little bit more expensive, everything gets up a little bit more expensive, and you're in the very same hand-to-mouth existence as you were when you had half the salary. And so there's a lot we can dive into in that.
Well, yeah, actually in that book that I mentioned that I read earlier, the author, who actually became a mentor of mine for over a decade, he called it Parkinson's Law.
Yeah.
He said Parkinson's Law is when your luxuries in life grow with the income that you receive. And so there's this constant relationship between the things that you do and the money that you make. And they constantly, if you don't put a cap on that, you will constantly live, like, as you said, hand to mouth.
Yeah, I've heard somebody, I think is it maybe Scott Galloway, one of those guys that he's quite vocal on social media and stuff. He was saying that he knows people earning like $3 million a year and they're hand to mouth. And so it's that lifestyle just keeps getting bigger and bigger. And next minute they're trying to pay for all sorts of expenses, holiday homes here, there and everywhere and stuff. And you end up in a situation where if your income was to stop, despite the fact that you have this incredible lifestyle, if your income was to stop, you're in big trouble very quickly.
Oh, I actually have a personal friend with almost exact numbers that they did take they went backwards a little bit on their income, and it's like everything in their life is kind of falling apart as a result. And it's so sad, but we all are capable of that, right? If we don't take control.
So how do we take control, Joey? Why don't you start with, you mentioned this operating system.
Yeah, so we wrote a book about this. So by the way, feel free to if you like more details and like want to dig into those, feel free to go get a copy of that. But the 3 steps that we kind of identified is that you have to have a GPS system, right? There's the goal, the plan, and support. And so we always start with goal, because if you're literally using a GPS system, like on your phone, you have the app that tells you your maps or whatever, right? And the critical thing about that is you have to know where you are today and what the destination is. Without one of those 2 pieces, you really can't know what the next step is, right? And so take inventory of where you are today, and then the destination. But most people, Gavin, I would bear to make this comment. Most people have no idea what the vision is that they're trying to accomplish. They're just head down, working hard, just kind of trying to keep up, doing all sorts of things with their money that they've heard here or there that they think are good, but they're really not working in tandem with a vision. And I think, we were talking before this, is that most people that listen to your show are trying to achieve some sort of financial freedom. And that, first of all, that's amazing because you at least are calling it something. But what I would challenge you to do is say, what is the picture of what you will be doing when your calendar is your own? Okay? Because if we're talking passive income exceeding your monthly expenses, how the most tangible thing in my brain is I pull up my phone and I look at my calendar, and all of a sudden the things on that calendar are things I desired to place there. They weren't placed there for me.
Yeah.
In other words, nobody else is dictating what my time is being used for. So what would I be placing on that calendar today? You're not there today? That's great. What would you be putting on there? And it's not going to be, if we're really honest with ourselves, it's not going to be, I'm going to go lay on a beach every day for the next 30 years. It's just not, because we're meant to be contributors to this world, right? God didn't make a bunch of people that are just completely satisfied to be selfish and by themselves. That's just not how we're built.
Yeah.
So what is your contribution? Who are the people in your life? Who are you to become? What would you be doing? And what would you have? If you can do those three things, like be, do, have, if you think about that, then that helps you build a vision. And once you know that, you can kind of check mark goal, right? I have my goal. And then from there, you can build the plan. And we can dive into that as deep as you want. But that's ultimately now, what do I do with money to support that goal? Does that make sense?
It totally makes sense, yeah. It's a framework I use myself with my own coaching clients. I have this thing called baseline wealth. And we kind of start with where you are. And then it's only when you know where you are that you really can figure out where you're going.
It's so smart, though, but so few people actually stop and do it. And I think we're, like I said, we're trying to do what we think is right, And I don't know where you are in the world and what people have been telling you to do with your money, but if you've never started with the goal, then you really don't know if the things you're doing with money are supporting that or going against it. And I'll give you an example. When we walk people through this framework, most people will immediately start to identify that some of the things they're doing with money are actually going in the complete opposite of what they would have wanted to do with their life. For instance, we talked about, in America, it's things like individual retirement plans, 401ks, IRAs, like all the alphabet soup we could come up with in America. I don't know what it is where you're at, but there's somebody who's telling you need to put money away for a long period of time and not be able to touch it until you're a certain age, right? Here in America, it's 59 and a half. Right. And if you're 30 or you're 40,
seems like a long time.
It's a really long time. And if I'm really actively producing financial freedom today, then it doesn't matter what the rate of return is. It doesn't matter if there's a tax benefit to me. If those plans require me to put money away and not touch it for the next 20 years, 30 years, whatever it may be, it immediately flies in the face of my goal to be financially free over the next 5 years. So I'm going to immediately stop doing those things, even though it's not a bad vehicle. It just doesn't support the goal that I've created for myself. And so I can no longer contribute to those things. Does that make sense?
Yeah. No, it makes total sense. I think before we started recording, I was telling you that a lot of my listeners will be people that are interested in real estate and probably modest real estate goals, like own maybe a couple of houses as investment properties or something like that. But the reason that they look at property a lot of the time is because they may have a distrust of putting money into the stock market because they've seen the ups and downs, and the fact is, like, who can choose the right stock? You put your money into a stock and then suddenly it falls in half overnight, and you're kind of like, how was I to know that? It's the same with people who would have put money into the cryptocurrencies and stuff in the last couple of years. I mean, that was a bit of a gold rush, and then suddenly it falls flat on its face, and everyone's kind of lost a lot of money. How do people navigate this, Joey? Give us some suggestions.
Well, first and foremost, your gut instinct about real estate is right on. Because why? It's a tangible asset But even more so, and I think this is where some people that even have real estate as like the potential vehicle, sometimes we get focused in on what's the appreciation going to be like, right? Okay, I can buy today at whatever the price is, and then over the next 5 to 10 years, it's going to grow in value. That's fantastic. But does that actually produce freedom? And the answer I would tell you is no. Not unless it's producing a passive income, a cash flow that is now I've traded dollars into this asset, into this investment property. And if it doesn't produce monthly cash flow, I'm no longer, again, go back to our formula. Is it producing more passive income than my monthly expenses? If it is, it's getting me closer to my goal. If it's not, if I'm just cash flow neutral, but I'm hoping that one day it's going to be worth a lot more, then I'm only focused on appreciation and it's not getting me closer to financial freedom today.
Yeah.
And so you're right. The instinct is right. The asset type is right. But now we have to focus in to support our goal to get to financial freedom. I need to be looking really tightly at how much passive income will this produce per month. And then I divide that into like what my monthly expenses are, and I know how close I am to financial freedom. Like a good example would be, man, if this property is producing, $500 a month of passive income, let's just say, for instance, and my expenses are $10,000 per month, I'm now 5% to my goal of financial freedom. Well, then it's just rinse and repeat. How many more can I do, and how quickly can I get there? So that it takes this complex idea that the world has tried to tell you money is difficult and financial freedom is difficult, and it brings it to a very simple, tangible process that we can be in control of. Like, we don't need anybody else to help us with this. We can literally figure this out on our own.
So tell us, real estate's a great example, and it'll obviously resonate with a lot of our listeners, but what would some of the other investment asset types that you would recommend?
Well, so the interesting thing in America is when people hear the name Wealth Without Wall Street, just say for yourself, wealth without the stock market, right? It's not putting money away where someone else is in control. So what that turns into us is, if you listen to our podcast, Russ and I actually, we share with everybody what our passive income report is every single month. Okay. Right or wrong. Like, if we lose money in it or if we gain money, like, we want to share with you exactly what's going on, because we want to inspire, but we also want to help people with that direction. But the biggest question people ask us is, well, what should I invest in? And instead of giving an answer direct to the type of investment, we would say, hey, Gavin, what sort of investor are you? Right? And most people have never even thought about this.
Yeah.
But there's a specific way that you were created, that you see the world in a certain way, right? We call it the investor DNA profile. And it's essentially, have you ever taken one of those personality tests, like the DISC profile, for instance?
Right.
If you take our personality profile, the investor DNA, it tells you, hey, you are, let's say, a high D personality. That means you're a driver. That means you like to be in control. You want to see bottom line results very quickly, like have a fast pace, whatever the case may be. And then we have with it a passive income matrix that tells you the top maybe 14, 15 things that we've either been involved with or we have interviewed people who are involved with, and we say, how would a D like, for instance, investing in vending machines? Well, they're going to love the business aspect of it. They're going to love the fact that they can scale it quickly because it's really low barrier of entry. In America, for instance, I'm just saying, you can go and buy one of these machines for $5,000 and they can produce anywhere from $800 to $1,200 a month net profit pretty consistently. So that's really attractive. But then what would a D personality not like about vending machines, for instance? Well, they're not going to like the day-to-day management and having to go, refill these machines. It's just going to feel like below them, right? So what can they do? It doesn't mean it's not a good fit for them. It just means they may need to figure out a way to scale it as a business with multiple people supporting those things that they don't really necessarily love. So that's a long explanation to say, we have talked about all these investments, but really we had to start with who are you, so that you can like funnel it down and get really focused on the best like pathway to freedom for you.
That's a really good way. Actually, that's an interesting thing. One of the distinctions I have as an investor, I look at investors in, there's a spectrum, and on one end there's a gambler, and on the other end there's an analyst. And if you're skewed to one side or the other, there's going to be a problem. And in a rising market, the gamblers do great, but when it crashes, but they can crash and burn. The analyst will almost never lose any money because they'll spend so much time analyzing a deal that they'll never actually make a deal. They won't take action because they'll spend every waking minute analyzing it a little bit further, and then the opportunity is lost. So finding some sort of a balance in the middle is the way to do it. But you're going into even more detail. So tell us about those different profiles. Like, you have a high D. Is there an A, B, C, D, or how does it break down?
So we've based our whole program off of the DISC profile, which is the D, I, S, and C. And if you can think about them, and everybody's very unique, so forgive me for being very generalized, but the D is that, like we already said, kind of a high driver. And okay. I is somebody that's very much driven by the way things look. They want to be kind of the center of attention. They love image and influence. If you think about, like, they're very good, like, sales oriented type people. An S profile is going to be somebody who's more of a supporter. They're more loyal. They're more kind of cautious, if you will, and reserved. But they're they're very loyal to, and they love working on teams. Let's say a C personality would be like what you said as an analyst, somebody who gets down into the weeds. They love the details. They really want something that's very kind of proven, set, like very risk averse. Yeah, conservative. So if you think about those four types, everybody's some variation of multiple of them, but you can kind of get the feel. And most people can immediately tell which one they are kind of dominant. And then that's where we partner that with that matrix, and it helps people to say, oh, well, I love the idea of short-term rentals or vacation rentals, if you will, but I'm going to need somebody who is really good at systems to help me with the behind the scenes, because I love the hospitality aspect of it. Like, I'm a high I, but I don't really want to get stuck answering phone calls at 2 a.m. because someone forgot, to turn off the tub and it's overflowing in the unit, and the negative part of running the short-term rental business. So does that make sense? Yeah, no, it makes total sense. And I can see, it's funny, there's a profile. It's not a specifically investor, but there's a profile that I've seen before and I've used it, called the Colby A index. It's very similar, and you get a number. My number is 3295, and so the 9 is a what they call a quick start. Yes, and so it's funny when you look at this. It's very easy when you can break it down like that, because you can kind of see the strengths of a person's personality, the area that they excel in, and then the area that they definitely need some support in that area. So I can totally get it. Yeah. Once we kind of unlock this personally, it has made all the difference in what we invest in. We talk about our investor buy box being really defined now, because it helps us, because we know our type. Now we can say, this sounds like a good idea, but it doesn't fit my buy box because of X, Y, or Z, right? And I think that has helped us to go faster in certain areas, to stay out of things that may be a distraction or a drag. So I think it's a really valuable tool. And if you ever, our podcast, we share our passive income report. There are things on there that are losers, and most of them are things that when we got outside of that investor DNA, some of them we did before we understood that, and some of them we didn't stick to our guns, and we realized on the back end, oh man, this wasn't a good fit for us, and we pushed through it anyway. Now here's the other side of it. So
So you do, in terms of your investments, do you do what we'd call a post-mortem, where you go and look back after and say, right, where did we screw up? How could we have done better in this?
Oh, yes, absolutely. In fact, most of the time, if it's, me and Russ sharing on the podcast, there's one in particular I'll share is a drop shipping website that I bought. This was in 2019. And it was something I told you I have 5 daughters. So I'm thinking, how can I help my daughters learn how a business is run? How can I help them understand how to invest? So I found a website called 100unicorns.com. And I thought, this is the greatest thing. I don't have to have inventory, but I can teach my daughters that people go to this website, they pick out unicorn themed clothing or whatever paraphernalia of some sort, and it gets shipped from China directly to them, and I just make what's in the middle. This is a great thing. And then I realized I'm not an operator. I am terrible at the details behind running a website. I'm terrible at all of just the day-to-day customer service and things like that. And the worst thing, I didn't understand how Google ads and how to drive traffic to a web page. So here's this thing that was making a little bit of money just going downhill every month, and I'm trying to figure out a way to get an operator in there. That was too expensive, and it just wasn't working. So then I moved into, well, I'm going to hire an operator to create an Amazon business around the theme of 100 unicorns. Well, now we have that on Amazon. We have 2 products on there. But what we've also figured out is that there's a lot of Chinese impersonators coming on, making the same products for half the price. And it's this is still not. So I started moving in the right direction, with having an operator, because I knew that was, didn't fit my investor DNA. And now there's other variables that have to come into play. So you said, do we do this? Of course, I'm kind of in the middle of it right now as we speak.
It's interesting you say that, because I can relate to what you're saying. If we talk about real estate investment, I've seen what happened to me in the past, and what I see happening today as well, is that people look at real estate in their hometown or in their home state or whatever, and when they're looking at it and it seems too expensive, and so the natural inclination is to sort of look further afield, and so they start thinking about investing overseas, and they look at other markets. And I did this in 2005. Ireland started looking very expensive. I decided, let's have a look at Spain. And I looked at property in Spain, and it was a totally different market. But to my eyes, coming from Ireland, I was looking at saying, oh, that looks like great value. And so I bought it. And sure enough, then I realized, oh, it's a totally different market here. It doesn't rent as quickly. It doesn't turn around. The taxes are higher, all of this kind of stuff. And so people, just a little bit of knowledge can actually get you into trouble. And it's like you're just saying about buying a website. Sounds like a great idea, but when you start to learn all the little idiosyncrasies around running a business. And another thing you mentioned, the impersonator, the Chinese impersonators. I have my social media profile, and I actually have these guys that are impersonating me, that they're creating alternative profiles with my image, my name, everything. And then people connect with people, and they're like, hey, it's Gavin here, would you like to invest in my crypto? And so it's just a scam, obviously, but they're actually doing this actively. So there's an awful lot of people out there. You really do have to be careful. As Gordon Gekko said, a fool and his money are lucky enough to get together in the first place. So tell us, Joey, I mean, you've gone through the goal, and we've talked about the investor DNA profile. The plan comes after you figured out what your profile is, yeah?
That's right. Yeah, because again, you want the dollars that you're making to support your goal. And so for us, it ends up becoming like, hey, what debts should I be paying off and what debts should I not? Because again, we're going back to this passive income exceeding monthly expenses. Well, that debt freedom does not equal financial freedom, because I could pay off all of these debts. And some people in America, I know, and I think worldwide, would tell you, just get out of debt, just get out of debt. That's the only thing you have to worry about. But then if you wake up the next day and all your debt is paid, you still have monthly expenses, right?
Yeah.
You still have taxes for your property, you have insurances, you have food and gas and all these other expenses you can never get rid of, right? So you have to also be working on the passive income side of things. And so then it becomes a math problem. Should I take this $50,000 or $20,000, whatever the number I have in my possession, and buy an asset that produces passive income, or should I use it to pay off this car loan or this business loan or credit card or whatever the case may be? And you just do the math. Okay, did this one produce more passive income than it would have reduced my monthly expense? Then I'll go buy the asset, or vice versa. And so your money starts to be dictated once you've supported your goals with that. Your cash is flowing to the right locations where you can have access to it. In America, in parts of Canada, a lot of people are using a vehicle that we read about in this book, Become Your Own Banker. That was the first book that I read back in 2009 that changed everything for us. And it's a specifically designed life insurance contract that allows you to put your money there and have access to then leverage into these assets. And that becomes a really key part of your passive income operating system. Now, where you're at in the world, it may be different than that, but you need the right vehicle that supports the goal. And for us, that is the most efficient means to getting us to the end. And so that's how that plan really comes together.
Right.
And then the last piece is just, who are you around? What messages are you taking in that produce the support to get you there? Because sometimes you need a mentor. Sometimes you need a coach. Sometimes you need a community of people that are on that same path. And sometimes you might need to invest in a program, because some people, like I said, they may not know exactly what they want to invest in, but they start determining, well, maybe investing in raw land would be good. And they need to hire somebody who's been there and done that to show them the way so they can get to financial freedom as fast as possible. But by whatever means, get the support you need, because the people around you every day typically are not going to help you get to financial freedom because they don't even know how to do it themselves. And so you have to get around the right people.
Oh yeah, for sure. And the thing, one of the things that I say, and it's funny because I do coaching and mentoring and things like that myself, but you have people that immediately see the value of somebody with experience. So if you're working with me and I have 30 years of experience, the chances are I've seen a lot of the deals that you're looking at, the types of deals that you're looking at. And like over the years, I've made mistakes and I can identify why I made those mistakes. What did I do wrong? Where should I have made it? What should I have done differently? And just by hiring a mentor or working with a mentor, they can steer you away from all of those mistakes. But some people are quite stubborn. And they say, you know what, I don't need some guy telling me. And I was one of those people. I was like, I'll figure this out myself. I don't need some guy telling me how that happens. Now, my father died when I was quite young. And so I didn't have who I would have probably used as the mentor. I would have had, like, my dad might have been my guide. But I felt most of the time that I didn't know anyone that I could go and rely on to ask. And so that's one of the reasons why I've built my own community, is just to have that support network for others so that they don't feel like there's nobody to ask the questions.
Oh, it's so good that you've built what you've built, because I'll just be honest, man, the people that think that they're going to save money by not hiring a coach or mentor who has been there and done that will always, I will venture to say always, pay 10x what they would have to pay the person to keep them out of trouble. I mean, especially in the world of real estate, the number of variables, the number of potential things that you run into, you never plan for, but they come. And again, sometimes they're cloaked in opportunity. Yeah. And they end up, like you said, kind of going the opposite direction. And man, what would you have paid at that point if that deal went south on you? What would you have paid to not have to go through that?
Oh, it's so true. Yeah.
It's amazing. So
and it's funny when you say that, you use the perfect expression there, like cloaked in opportunity, because I went after a deal in 2005. I've shared this before on the podcast, but I went after this property and we had a tenant who was ready to move in and they hadn't signed the agreement yet, but the guy that I was buying the property from, he was demanding that we close the deal. And I'd just said, look, just give me another week. And unbeknownst to the seller, I was trying to get the tenant to sign the lease before I bought it. So I had both sides of the deal kind of sewed up. Anyway, he said, I'm pulling the deal. You close today or I'm pulling the deal. So I thought, geez, okay. So I went ahead and I closed the deal. And then I said, okay, I better go and get this lease signed as fast as possible. And 2 weeks later, the lease fell out of the bed. And it was, it was a disaster because we thought we were going to double our money with the lease signed. And instead, we ended up in a situation where eventually, 9 years later, we sold this asset for $500,000 loss. And 9 years of paying the interest on the loan and everything. I mean, it was a total, but we thought we were going to double our money at the outset. So when the guy told us that he was pulling the deal, we thought we're going to lose the doubling of our money. And so that was what we were focused on rather than the downside. So it's, and if I had a mentor, he would have said, Gavin, have a think about this. Look at the downside. Don't be focused on the upside only. And so it would have saved me $500,000 if I had had a mentor guiding me during that particular one transaction.
Yeah. And again, how much would it have saved you, right? The amount of, you see the cost of what that mentor or whatever would be, but you don't see the iceberg below that it could have saved you.
It's so true. And so in terms of the way that your system works, you mentioned a couple of different types of investment. You mentioned vending machines, and you mentioned raw land, and what kind of investments have you and Russ bought yourselves? I mean, do you try everything? Do you kind of have a little flutter? How do you kind of diversify your portfolio?
We have tried a lot of different things. We don't try everything based on now that we understand the investor DNA. But if you look at our reports online, we have a land flipping business that we buy and sell raw land through an operator. They run everything, and we just finance it, and we look at deals from time to time that they bring to us. We've had a short-term rental business that we built and have sold, and now it's on owner financing, so that's turned into like a lien that now we get paid on. We've done investment in businesses that we have full-time operators running, but we get either a debt instrument paying us back or some other sort of dividend or like distribution. Both in e-commerce, we have one in a FinCon type of project that we're involved with. We've done long-term rentals on real estate. We've done, like I said, vending machines. We're just starting into vending machines, and we have cars that we've rented on app like Turo, but we have operators that run that for us. So, and then we have like a couple of websites that we've owned. Like I mentioned, the 100 Unicorns, and then my daughter and I bought one together recently that is an affiliate website, and it's very profitable without a lot of actual hassle or maintenance.
And what would you say, I mean, if you can say, is the best deal that you've done so far in what area of all those that you've mentioned is the most successful?
I would say my main, or the one we're the most happy with, has been our land business, because it's completely hands off, and it's producing right now somewhere north of $32,000 a month, and it is just very, very profitable. I think overall it's somewhere in the 30 to 40% range nice. In investment wise, and it's very low risk in terms of there's not a lot of variables in it. It's just raw land, so there's no tenants, there's no toilets or termites, as you will. Yeah. And it just is a great cash flow for us.
It's funny you say that, because just the other day I just was speaking to a guy called Brent Bowers, and he deals in raw land, and so
he was on our show. Brent's a great guy.
Brent. Well, listen, we're going to wrap up, Joey. I know you have to get going. In terms of final question, I like to ask my guests is, if you had an opportunity to speak to your 20-year-old self, what advice would you give yourself?
I'd say don't get yourself into the trouble that I did with focusing on active income, right? As soon as you start to have any surplus, what can you start to do to get yourself out of the requirement of trading your time for that money? Like, what could you be using that money to produce passive income? Because, man, to have the freedom that we have today, like my relationship with my daughters, with my wife, with my friends, my community, are so much richer and deeper because I'm no longer tied to this requirement to trade my time. And that's the gift that I wish I could have given myself at that age.
Well, Joey, it's great. I'm going to put some links in the show notes to your website and your podcast and things like that, and wishing you the best of luck.
Gavin, thanks so much, man. It's awesome to be with like-minded people.
All right, guys, I hope you enjoyed that conversation with Joey. I enjoyed that conversation, and it's funny, it would have gone on a bit longer, but we were a little bit tight on time. And I got a message there right at the end from Joey, who was frantically letting me know that he had something else starting right away. So I'm actually hoping to go on Joey's podcast in the near future. So I'll put a link out to that down below if you want to check it out. In the meantime, guys, don't forget, I have the accelerator, and we had a very, very successful launch of it for the October intake. I'm now starting to focus on the January intake, and there will be an in-person event in February, the first Saturday of February. And so there will be those of you who kind of have been thinking about this, sitting on the sidelines and stuff. Now is the time to start opening up the conversation. Reach out to me. There's various things that you can do just to be in position for the beginning of January when we start this next intake. So let me know if you're interested. Reach out to me, and I look forward to speaking to you. Until next time, take care.